Oh my, April CPI just kicked in the door and reminded all of us that, well, inflation is not finished with us yet. And inflation jumped, mortgage rates are definitely under pressure. And we're going to talk about that in our last segment today. Big move as far as interest rates are concerned. And today we're covering three things. Inflation is heating back up. Clearly, home sales still stuck at like 1990 something volume, and mortgage rates, well, they were steady, but not as of the end of the day Friday. And stay with us for this week's mortgage tip, because it's going to be a really important mortgage tip. If you're out there, you're a buyer, you're looking for homes, and so let's get started, shall we? And so here's what just happened. Inflation came in hotter. I'm not going to say that expected. Folks that do this every single week and look at these numbers, we expected this. The April Consumer Price Index, which is also called CPI, which is basically inflation for you or me, jumped to 3.8% year over year, up from 3.3 in March. The big driver was, of course, energy. And energy affects far more than just gasoline. It touches airline tickets, fertilizer, transportation, food. Almost everything in the economy is touched by energy. The Bureau of Labor Statistics reported that energy rose in April, accounted for 40% of the monthly increase. Shelter cost also rose, although some analysts believe part of the shelter increase may be more of a statistical accounting issue. So why does this matter? Well, because inflation affects mortgage rates through the bond market. If inflation looks sticky, mortgage rates usually rise, and they did. We're talking about it in our last segment. So give me the plain English version. Why should a home buyer care about CPI if they're not sitting around trading treasury bonds?
Because CPI is like the weather report for your future mortgage payment. When inflation's running hot, lenders worry about long-term value and raise rates. So even if you're not trading bonds, you definitely care about what they're doing to that monthly bill.
So,
all right, Sol. Next up, home sales are still stuck in that 1990s groove. Let's break that.
no, it's okay. Hey, you forgot to ask me the question. And look, we're training our AI. So bear with us. And your question for me today was mortgage, from a mortgage professional standpoint, when inflation jumps like this, what should buyers do? And they shouldn't panic. They should prepare. In Houston and across Texas, energy prices matter because this is an energy sensitive economy. Higher energy costs can affect consumer confidence, builder costs, transportation, and ultimately affordability. So buyers, what are you watching for? What are you waiting for? Are you looking for major mortgage rates to drop or prices to drop? Because I don't think mortgage rates are dropping anytime soon, but we do see prices dropping. And so inflation, well, it's pretty hot. So let's move on to talking point number 2. This headline sounds small, but it tells a big story. Existing home sales barely moved. According to the National Association of Realtors, April existing home sales rose 0.2% month over month to an annualized pace of 4.02 million. And, we've been stuck at this level for 3 years now, it seems like. It's for more than 3 years. Existing home sales have been stuck in a very narrow range, 3.9 to 4.2. And that's incredibly low based upon historical standards. And here's the wild part. The pace is similar to the mid-1990s when the country had millions fewer borrowers, fewer people, and also comparable to the slow post-housing crash after 2008. I don't know about you. I'm an advocate for DC to do something to stimulate the first-time homebuyer market. And so, but hey, homes are still selling, but transaction volume muted and very low. So why are people missing when they hear the sales rose 0.2%? What are they missing?
They might hear sales are up and assume momentum, but 0.2% is more like your car rolled forward half an inch. It's not a market sprint. It's more like the housing market is stretching its legs and checking the time.
Yeah. In Houston, we're still seeing a market that's very, neighborhood specific. Some homes are moving quickly and others, well, just aren't, and I know I just experienced in my neighborhood, I have a home right around the corner. It's been on the market for months. But my neighbor's home, it's only been on the market for a month and it sold pretty quickly. So I've got to believe that location has a lot to do with that, but pricing as well. And for Texas homebuyers, the opportunity, not about finding the right home, it's about finding the right seller, the right terms, and the right payment structure. And agents, what are you seeing out there? We'd love it if you'd share it with us in comments. And, buyers agree or disagree. Sellers still think it's 2021. So what do you think?
I think some sellers are still partying like it's 2021, while buyers are checking their 2026 bank statements. We need them to both join us in the present, right?
Yeah. So quick break from one of our new sponsors, HOA Share, and we'll be right back with this week's rate update. Thank you.
Tired of home service hassles? Introducing HOA Share, your trusted partner for local services. The only HOA platform that pays you back. Earn cash back on every service, tracked in real time. Easily manage payments, all in one place. From plumbing to home cleaning and more, HOA Share connects you to trusted service providers. Connect, buy and sell, get notified, and more. HOA Share, your HOA finally worth something.
Yeah. Hey, can you imagine what if your HOA actually worked for you? With HOA Share, homeowners can connect with trusted vendors, manage community services, and participate in a platform designed to bring transparency, community engagement, and better access to the services your home actually needs. Visit HOAshare.com. And if you're a vendor looking to grow inside of a real community, not just chase cold leads like it's a digital scavenger hunt, we should probably talk. So moving on to this week's rate update. And, things were, stable, I guess, as the end of business day on Thursday. But man, Friday the 15th, the market decided to put on its running shoes. Let me tell you, now this is important. Freddie Mac reported the 30-year fixed rate at 6.636 as of May 14th. And that made rates look basically flat for the week. But Freddie is a weekly survey, and it reflects an average rate for the prior Thursday through Wednesday. However, the market changed Friday rather dramatically. Mortgage News Daily, which tracks rates daily, is showing the fixed rate at 6.65 as of close of business day on Friday. That's 13 basis points from the previous day, and it's a meaningful move in one day. So enlighten us. Tell us what happened yesterday that moved rates so much in one day's trading, please.
Well, what pushed rates higher was that the bond market had a little panic party. After that hot CPI report, investors started fearing inflation even more, so they sold off bonds. When bonds fall, rates rise. So buyers should know, even if the Fed isn't touching rates, the market can move them fast.
Yeah, so yesterday's rates may already be wearing bell bottoms, right? And this market, old numbers get stale fast, which brings us perfectly to this week's mortgage tip. Really, really important. I'm seeing more of this than I've ever seen. And in today's mortgage market, one of the biggest risks to consumers isn't always interest rates, it's misinformation, fraud, and working with, just frankly, the wrong people. Consumers today are exposed to more noise than ever before. AI-generated misinformation, fake reviews, mortgage scam, wire frauds, predatory offers that sound too good to be true, and in some cases, inexperienced or unaccountable operators who may not fully understand what they're even advising to the consumer. The mortgage process has become increasingly digital. We use email, online portals, remote closing, electronic documents, systems, online verification, and wire transfers. That is convenient, is helpful, but it also creates opportunity for fraudsters. And the CFPB has warned consumers about mortgage closing scams and wire fraud. FHFA has also identified mortgage fraud prevention and cyber-enabled fraud detection as growing priorities in the mortgage market. I know that we make an enormous effort internally to always be on the lookout for anything that might be nefarious entering into our network. And the FBI has repeatedly reported major annual losses tied to real estate wire fraud. So here's the practical takeaway. Verify reviews and reputation. We go to #MortgageMack. We have nearly 200 5-star reviews. We earned that. And that's what you want to make sure that those reviews were earned and that they're local and they're directly connected to the individual. Ask how the process works. Ask for the security infrastructure. Be cautious of pressure tactics and never wire money based only on just email instructions. Phone. Always verbally verify wire instructions using a known trusted phone number, and make sure the people guiding your transactions are accountable, visible, experienced, and socially validated. This is why our process at Team Mortgage Mack is built around what we call E to the power of 4. You hear us talk about it all the time. Educate, empower, execute, and experience. So we educate you so you understand the process. We empower you so you can make confident decisions. We execute with clarity and discipline. And when we want the experience for you to be as smooth as we can possibly make it. And we believe the best way to do that is to plan your mortgage transaction, because it is one of the largest financial commitments most families will ever make, and education and verification matter. If you've ever seen a mortgage offer that felt too good to be true, drop verify in the comments. And if this kind of guidance helps you, hit subscribe, follow, and share this with somebody getting ready to buy a home. If you want to plan, not a pitch, contact yours truly, Mortgage Mack with Team Mortgage Mack. And that's your mortgage tip, because the only surprise we like in real estate is finding out maybe the seller, the vacuum and or the refrigerator. So moving on to this week's Stoic quote, Marcus Aurelius said, if anyone can prove and show to me that I think and act in error, I will gladly change it, for I seek the truth by which no one has ever been harmed. The one who is harmed is the one who abides in deceit and ignorance. Plain English, that's a powerful reminder that wisdom requires humility. And frankly, I just don't see a great deal of wisdom in today's world. And in real estate and mortgage, really matters, because people often make emotional decisions with financial consequences. And that's what we're trying to do. And the difference we're trying to make is we're trying to bring wisdom to the table. Wisdom requires objective analysis for appropriate decision making. And rates change, inventories change, affordability change, but strategy changes too. And what's harder for people in today's market is, I think, sometimes just accepting facts or changing the plan. So Marcus gave us wisdom. Now, as tradition demands, we'll immediately lower the intellectual bar and dive into some really bad puns. Soul, are you ready? Soul, do you want to take over this particular segment today? Okay, I'll take that as a no. Every book about Henry Ford is an autobiography. Chime in here, Soul, anytime you want. I'm going to refresh you. Humans get coffee, AI gets refreshed. Are you there, Soul? Every book about Henry Ford is an autobiography. I read The Maze Runner and got totally lost in it. I don't know that I get this one, but maybe you do. 1,000 Millie Bobby Browns equals 1 Bobby Brown. Okay, I get that part, but I'm not sure what Millie Bobby Brown that is. So you want to hop in here and save me? If she giggles like him, is it manslaughter, manslaughter? And the definition of opaque is, well, totally unclear. And before the National Association of Bad Jokes sends us a cease and desist, we're going to close this out. And without our trusty guest host, Soul, and sort of gone silent, maybe you should move to get coffee. And if this has helped you understand what's really happening in the market, hit the subscribe, follow, and share this with someone who needs clarity. And drop a comment. Are you watching inflation, rates, inventory, insurance, or all of the above? If you want to plan, not a pitch, contact yours truly, and we'll walk you through it the right way. Join us here every Saturday, 10 a.m. Facebook, LinkedIn. Until then, stay informed, stay engaged, and I'll see you